Have you heard? The S&P 500 just hit an all-time high. The US and China finalized a major trade deal on rare earth minerals. And Bitcoin is holding strong above 107K right now, while an upcoming $40 billion crypto options expiry could spark wildfire volatility. Today, we're diving deep into how these events are shaping global finance, transforming business, powering crypto, and why you need to understand what comes next. Stay with me. This is the video that could ignite your financial future. In just a few seconds, we'll unpack why that trade deal could spark a global marketplace reset, how the Fed's inflation report on PCE may signal an interest rate pivot, what Nike's earnings teach us about navigating tariffs, and why institutional Bitcoin adoption could either be the golden ticket or the next bubble. Get ready to ride the full wave of today's top headlines and what they mean for you. Don't go anywhere. This 30-minute journey will leave you smarter, stronger, and ready to seize opportunity. Let's go. First, let's break down the US-China trade deal. After months of tension, negotiators have agreed to lift tariffs tied to rare earth elements, those strategic minerals critical for tech, energy, defense. That means US access is back. For business, this unlocks supply chains, lowers prices, and fuels new investment in electric vehicles, clean energy, and more. Imagine factories running smoother, margins rising, and global tech once again taking the lead. That's why the S&P and NASDAQ shot to new highs this morning. Markets love certainty, and this deal is exactly that. But it gets better. Major investors are eyeing that rare earth flow as a catalyst to boost US manufacturing again. Think reshoring, new alliances, even strategic autonomy. And when stocks respond, consumer confidence follows. We saw durable goods orders climb last month, signaling not just business growth, but a rebounding working class demand. It's a domino effect. Policy unlocks supply, supply boosts production, production fuels income, and that is powerful. Next up, May PCE inflation data drops today. The market consensus, a 2.3% headline year-over-year increase, and core PCE likely at 2.6%. To many, that's tame, but it's above the Fed's 2% target. Still, markets are hopeful. Treasury yields have slipped, futures suggest rate cut pricing might return, and whispers of easing capital rules for banks hint at improved liquidity, especially for Treasury participation. It's a complex dance, but investors smell a pivot, and momentum is building.
Interest rate pivots are huge! They affect business loans, mortgage rates, corporate bond pricing, consumer credit, even stock valuations. Lower rates can unlock capital for businesses, encourage hiring, and revive consumer spending. But if inflation stays sticky, that party could be cut short fast. You and I need to watch those PCE numbers. They tell us if we're heading into a golden era of growth or just another false dawn. Now, corporate stories. Nike just beat earnings expectations, and their stock jumped 10% pre-market. How? A combination of cost discipline, pricing power, and supply chain resilience. Even with a $1 billion tariff headwind, Nike showed us how a legacy brand can pivot. They're investing in DTC, direct-to-consumer, internalizing logistics, and capturing data. Proof positive that businesses who innovate during uncertainty often emerge stronger. This is a lesson for every entrepreneur and investor. Don't just weather the storm, reinvent during it. Nike's story shows that clear vision and smart restructuring can turn headwinds into tailwinds. We'll talk about how small businesses can copy that playbook later. Turning to Tesla, news that CEO Musk's top aide, Omid Afshar, resigned grabbed attention. Why does that matter? Afshar led key sales and manufacturing efforts in Europe, where Tesla has seen 5 months of declining deliveries. Leadership shakeups often signal strategic recalibration. Could Tesla refocus its energy efficiency push, or pivot to new models or markets? We'll explore Tesla's next move and what it means for EV investors. Tesla's headlines remind us leadership matters. One departure can signal deep internal change. Investors hate uncertainty. Europe's EV momentum is crucial, and if Tesla wants to maintain dominance, they'll need tight execution and fresh energy. Meanwhile, Bitcoin is steady at about 107,400 despite the looming $40 billion crypto options expiry. Options rollovers can drive massive short-term swings, but stability is a positive sign. It suggests institutional calm. Bitcoin has matured thanks to steady ETF flows and growing treasury adoption among corporations. Yet this stability can be deceptive. Watch the expiry closely. A spike in volatility could create both risk and opportunity. The growing trend of corporate treasuries buying Bitcoin is explosive and controversial. Trump-aligned companies are leading the charge, building Bitcoin reserves. But critics warn it's a lot of kindling being built up. There's going to be a forest fire, warns Nick Carter, a top crypto VC. Investors, business leaders, and regulators are debating. When does a digital asset treasury become systemic risk? It's a live debate with real stakes. Crypto asset management is booming. The global sector hit $2 billion in 2024, projected to reach $2.5 billion by 2030. Firms are integrating DeFi, wallets, staking, fueled by institutional cash. AI tools are improving security, analytics, and yield tracking. That means finance is embracing crypto, not as fringe, but as core. But with growth comes complexity, regulation, compliance, risk safeguards, all critical for long-term sustainability. Blockchain is also disrupting traditional finance. Kraken Bermuda is launching tokenized stocks. Robinhood aims to offer similar on-chain services in Europe. Imagine buying Tesla shares in seconds, 24/7, with never-ending settlement, transparent trades, and global access. That's the vision. But regulators, infrastructure, and scale are still catching up. Is this the next frontier for equity markets? We'll examine the promise and pitfalls. NVIDIA just hit $155 per share, an all-time high. The company's valuation now tops $3.7 trillion, fueled by AI chip dominance and the broader trade optimism. Yet analysts caution, trading at 50 times trailing earnings is aggressive. The AI boom is real, but high multiples bring vulnerability. We'll parse where AI fits into tech, finance, and long-range business models, and whether NVIDIA can justify its premium valuation. Let's zoom out. Wall Street is flirting with record highs, driven by optimism from trade, a weak dollar, tech enthusiasm, and expectations of Fed easing. But global risks, geopolitical flare-ups, inflation surprises, policy shifts, linger in the background. The bull run could extend or abruptly reverse. For investors, that means balancing upside potential with prudent hedging. So, what's the big picture? We're living through a convergence. Trade breakthroughs, monetary pivot talk, tech AI euphoria, corporate crypto moves, and an explosion of institutional participation. Each thread feeds the other, creating what could be a multi-year bullish cycle. But it's fragile, dependent on disciplined policy, fresh data, and unwavering business execution. We'll explore strategies to ride the wave without getting swept. Practically, here's what you can do. Diversify across growth sectors, AI, crypto, green energy, hold tactical hedges, cash, gold, short durations, and stay informed. For entrepreneurs, emulate Nike. Use disruption to drive efficiency and innovation. For crypto-interested viewers, understand that options expiries, ETF flows, and treasury adoption bring both opportunity and systemic risk. Be cautious, stay tactical, and treat crypto as part of a balanced asset allocation, not your retirement fund. Finally, remember, today. I'll also run you through a simple AI tool-led exercise, setting up voiceover, scene visuals, and data overlays for this video using AI, demonstrating how AI not only powers global finance, but also powers content creation in the finance space. You'll walk away capable of launching your own AI-driven news finance channel, just like this one. Finally, remember, today's market isn't about luck, it's about insight, strategy, and execution. We've decoded trade deals, macro data, corporate strategy, crypto dynamics, and AI valuation. Now it's your turn to channel that insight. Invest smart, create smart, and always push forward. The world is moving fast, and you're right on the edge of opportunity. Thanks for watching until the end. If this video gave you clarity, energy, and strategy for today's fast-moving markets, hit that like button, subscribe to our channel for daily finance insights, and drop a comment below. Which theme resonated most? Crypto, AI, trade deals, or inflation? I'd love to know where you plan to focus your energy and strategy. Remember, every day brings new headlines, and with smart understanding, you can turn them into opportunity. I'll see you tomorrow with fresh analysis and actionable insights. Until then, stay inspired, stay ahead, and keep believing in your power to shape the future. Onward.